One thing that you note is that people are overestimating the long-term impact of tariffs and underestimating Apple's adaptability. When you say that, Professor, what are you referring to? Are you referring to the company's financial flexibility or its logistics supply chain flexibility?
I think it's got both. It's got, obviously, the $200 billion in cash gives you a lot of financial flexibility. But the operating flexibility is also there. I mean, moving an automobile manufacturing plant from one country to another takes 5, 6, 7, 10 years. Moving a manufacturing of smartphones from one country to another, it's an exercise, a logistical exercise, but it can be accomplished sooner than for a manufacturing company. I'm convinced that the need for adaptability is going to actually make some of these Mag 7 companies more powerful going forward because they're extremely adaptable. They can move things sooner than you think they can. I saw this morning an article about Apple and how its value could be halved because of the China tariffs. I think that's the kind of overreaction to what this will do to Apple that I think will make it a buying opportunity if, in fact, the price does drop.
You mentioned, of course, the $200 billion in cash gives it a lot of financial flexibility. What can Apple do in this moment, aside from doing things like moving parts of its iPhone supply chain away from China, to really capitalize on this moment and use its cash as an advantage and, perhaps grow parts of its business, grow its footprint?
You know, what set Apple apart from the rest of the world is how cautiously they've approached the world for the last decade. They haven't made big acquisitions with AI, didn't jump in with both feet. And in many ways, that served them well. And I think, you're not going to be able to change the way a company operates. And I think Tim Cook's style is deliberative and slow, and I think it stayed deliberative and slow. So I don't think you're going to see Apple do anything rash just because they feel they have to do something and they have $200 billion in cash.
Yeah.
And I think that's the right thing to do for the company.
I am curious, Professor. I mean, this isn't just academic for you. You have made it clear that you're an investor in a lot of these names, a lot of these Mag 7 names, with, I believe, maybe the exception of Tesla. I am curious, beyond just the fundamentals here, I mean, you mentioned kind of Tim Cook.
Right.
I'm curious what your thoughts are on leadership, because at the end of the day, a lot of what's going to happen over the next few months and quarters potentially is going to be much more about managing Washington and managing geopolitics rather than just focusing on selling more products and managing the bottom line.
Hey, you need steadiness at the top. And I think that, as I said with Apple, the fact that Tim Cook is a steady hand at the top does give some confidence to investors in the company. And I think the key thing to remember is even if you believe these companies are significantly overvalued at the moment, and that's perfectly reasonable to conclude, there will be a time when these companies are going to be buys. And these are not companies you want to keep out of your portfolio in the long term. If you get a chance to buy it and the price drops enough, I would invest in them, because not only are they cash machines in many ways, they're run by people who I think have shown the capacity to adapt to whatever the outside environment is and make decisions that work out in the long term.